Hey all, welcome to Share Trek. This is Raj here. Friends, today we had a major news from Illumina. Carl Icahn has sued the members of the Illumina board over Grail acquisition. In this video today, I will look at the key portions of the Grail agreement that detail the termination clauses and explain my thoughts with regard to the share price and what might probably happen going ahead. So with that said, let's get started. Welcome back, friends. Just to jog your memory, in the recent past, when Carl Icahn set sights on Illumina, he had mentioned the following points in an interview. So first of all, Carl Icahn alleged that Illumina's directors demanded extra personal liability insurance before the biotech company signed off on a $7.1 billion acquisition of cancer test developer Grail in 2021. He also alleged that the Illumina board decided not to tell the shareholders about other negative information when they closed the deal, such as how it could incur significant tax liabilities if Illumina is forced to unwind the acquisition. Those of us that saw the board meeting aftermath should not be surprised to see that yesterday Carl Icahn sued members of the Illumina board over the $7.1 billion acquisition of Grail. The substance of the lawsuit is that the defendants breached their fiduciary duties, and the suit was filed in the Delaware Court of Chancery, which is where most of these suits end up, and is sealed for now, which means that we won't get to see the contents. Therefore, we may not know the exact detail at this point of time, but very soon we'll find out all the details when the suit is unsealed. In a statement, Icahn said throughout his long career, he had never found it necessary to sue board members in this manner until today, and that he has done so today in light of, among other things, the board's unconscionable and egregious actions relating to closing the acquisition of Grail without regulatory approval from either of the regulatory bodies, thus putting Illumina, a great company, in harm's way. So this is how strongly Carl Icahn feels about it, and that's the motivation behind the suit. This comes after the European Union's ordering Illumina to divest Grail months earlier, and then fining Illumina $476 million for jumping the gun on the transaction, and now providing detailed instructions on how Grail is to be divested, and giving Illumina a 12-month deadline and a potential 3 months extension, while allowing sufficient latitude in framing the divestiture so that both companies restore status quo that existed before the acquisition, and providing for Grail to have funding for 2.5 years post-divestiture. So I'm not even talking here about Illumina's troubles with FTC. That's a different chapter altogether. Just looking at the EU situation, it seems formidable. An Illumina spokesperson said the company is reviewing the suit and could not comment at this point of time. But just to jog your memory yet more, after Illumina's prior CEO, Francis D'Souza, stepped down and chairman of the board lost his seat in the aftermath of Icahn's proxy campaign against the company, Illumina recently named Jacob Theissen as CEO, with a pivotal year ahead. Though Carl Icahn wanted Jay Flatley, the earlier CEO, in that role, he still went on record at that time to say that he supports Jacob and believes that he'll be able to do a great job. Icahn now has one of his own nominees on the board. He wanted 2 actually, but he got only 1. And over and above that, the earlier CEO expanded the board from 9 to 11. So that further diluted Icahn's influence on the board. Icahn said that he continues to believe in the company's long-term potential and has full faith in Illumina's new CEO and its employees. Several of Icahn's companies filed the lawsuit under seal in Delaware's Chancery Court 4 days after European Union ordered the ordered Illumina to unwind its $7.1 billion acquisition of Grail. So I decided to look up the original Grail deal, and you might all agree with me after you look at this deal that Icahn was right when he when he decided to sue the board. Just take a look at the termination clauses. Let me open the document first. Well, here is the document, the original agreement. It's in sec.gov. So I'm going to look at the regulatory approvals page. This is a huge document. I'm just going to zero in on the area that is of interest to us. So out here it says completion of the transaction is conditioned on, among other things, the expiration of or termination of the applicable waiting periods under the HSR Act. The HSR Act, or the Hart-Scott-Rodino Antitrust Improvements Act of 1976, is a United States federal law that regulates mergers and acquisitions to prevent anti-competitive practices in the marketplace. And the primary purpose of the HSR Act is to provide government agencies with the information they need to assess the potential antitrust implications of large mergers and acquisition. And here it says that completion of the transaction is conditional on, among other things, the expiration or termination of the applicable waiting periods under the HSR Act, the approval of antitrust authorities in certain other specified jurisdiction, I think it could also include EU, if applicable, and no law having been enacted, issued, promulgated, enforced, or entered, whether temporary, primarily, or permanent, which is then in effect and has the effect of enjoining, restraining, prohibiting, or otherwise preventing consummation of the transaction, or imposes any remedies on Illumina or its subsidiaries other than permitted restrictions. So this is the first part of the paragraph that I think is relevant to our discussion today. And then I would take you to termination page 202, which is where we have the bulk of what is of interest to us. That's where it talks about the penalties. Here we are on page 202, expenses and termination fee page. All expenses incurred in connection with the merger agreement and the transaction will be paid by the party incurring such expenses, whether or not the mergers or any other transaction is consummated, except that expenses incurred in connection with the filing, printing, and mailing of this consent solicitation statement or prospectus and the registration statement of which this consent solicitation statement or prospectus forms a part will be borne by Illumina, whether or not the mergers or any other transaction is completed. So now here is the big one. The merger agreement requires Illumina to pay Grail an amount equal to $3 million, which is the regulatory termination fee, if either Illumina or Grail terminates the merger agreement because the effective time date has not occurred on or before the outside date, as it may be extended, and at the time of such termination, one or more of the conditions to closing relating to antitrust approval, the absence of any restraint prohibiting the completion of the transaction, or the absence of any restraint under antitrust law which imposes any remedies on Illumina or its subsidiaries other than permitted restriction has not been satisfied or waived. So upfront there is a $300 million termination fee, and it requires Illumina to pay. Either Illumina or Grail terminates the merger agreement. So this is again not a very comfortable position to be in. And then if we scroll down further, we have a situation where it says that in the event that the merger agreement is terminated in circumstances where regulatory termination fee becomes payable by Illumina, Grail may require Illumina to make an additional $300 million payment to Grail in exchange of shares of non-voting Grail preferred stock. So this is what we have in text out here. So if I was to explain this, I'll say this passage discusses two important financial aspects in a legal agreement. It says, the first part is the expenses. It says that all the expenses for doing this merger basically is going to be borne by Illumina. And then it goes on to talk about the termination, where it says the termination fee is an amount of money that one party, in this case Illumina, would need to pay to the other party, Grail. If the merger agreement is terminated under certain specific circumstances, the fee is set as $300 million. The condition for this fee to be paid are outlined in the detail, but in simple terms, Illumina would have to pay this fee to Grail if the merger agreement is terminated due to issues with regulatory approvals or antitrust laws. So how would anyone want to enter into an agreement like this? Ideally, an agreement should say that termination fee would not apply if regulatory approvals were not achieved. That's how I have generally seen agreements be, but this is the other way around. And if certain other requirements are met, additionally, there's a provision where Grail can request an additional payment of $300 million from Illumina if the merger is terminated in a way that triggers the regulatory termination fee in exchange for non-voting preferred stock in Grail. So in essence, this passage clarifies who covers the costs of the merger process and outlines the financial consequences if the merger agreement falls apart due to specific regulatory or legal issues, which includes issues with regulatory authorities. That was the legal part. I'm always very uncomfortable with legal parts because the language used there can always be convoluted and it's difficult for a lay person to understand. But overall, the feeling I get is that the agreement was not at all in favor of Illumina shareholders. It was not in the interests of Illumina shareholders because it absolved Grail for any failure in Illumina completing the acquisition due to EU Competition Authority or FTC's objections. That's how I read it as a layperson. If any of the viewers are lawyers and you think I have interpreted it incorrectly, please put it in the comment section below. But I feel confident that I have got the gist of it. But now coming back to what's going to happen after this, right? So if we look at the cash and cash equivalents in Illumina's book, we will find that they had $2 billion at the start of January 2023. And at the end of Q2 2023, they had only $1.55 billion of cash and cash equivalents. So they have burned through that much. With their NovaSec X doing very well, Illumina expects a 1% increase in revenue this year over what it made last year. This is a growth revised downwards from 7%, while PACB at the same Q2 earnings call was very optimistic and gave an upbeat forward guidance. This also led to a further fall in Illumina share prices. Recently, Charles Dodswell, the interim CEO, had said that despite additional placements, Illumina expect the second half revenue to be negatively impacted by customers remaining more cautious in their purchasing as a more protracted recovery in China goes underway, and a larger than expected temporary decline in high throughput consumables as customers transition into the NovaSec X platform. And Illumina had positive quarters so far. If I look at their track record, and analysts expect a revenue of $1.13 billion and an EPS of positive 0.129 cents when Illumina reports Q3 2023 results on 9th of November 2023. So that date is very crucial. So I expect the Illumina shares to be languishing a little bit until it comes to that date, and we'll see what happens with the guidance from the management. We have a new CEO. And we'll also see whether Illumina is able to meet the expectation of the street. And if they meet and expect the expectation and the CEO talks positively about the Grail divestment, then I'm pretty sure that Illumina will start galloping back up again. And getting back to the Grail takeover agreement, based on the agreement, I am thinking that Illumina entered into a deal that was not good for Illumina shareholders. The calculation that it possibly had in its mind is that if the takeover was thwarted due to FTC or EU rulings, Illumina will have to shell out $600 million and other costs. This meant that they took a chance of defying the competition authorities, hoping that the fines would be less than $600 million. Not only were they not able to assimilate Grail due to subsequent orders by the EU that it should be kept as a separate entity, but also they paid a fine in excess of $400 million and got Carl Icahn's attention. Shareholders' wealth dropped significantly as the share plumbed depths not seen before, and it's, I think, very close to its 52-week lows at this point of time. Now that they have completed the acquisition of Grail, they are no longer on the hook for $600 million. This is my personal opinion. But the EU instructions make it very clear that Illumina has to provide for 2.5 years of funding to meet Grail's current plan. I would like the new management to negotiate with the European Union and try to salvage a part of the fine that EU had levied on it, pleading for a little bit of leniency out here and agreeing to divest Grail. And divestiture of Grail will also attract a bit of loss because the market conditions are difficult right now. But if Illumina decided to divest it by giving Grail shares to Illumina shareholders, then probably it can postpone the divestiture related loss and leave it in the hands of the shareholders who can then decide if they want to sell Grail shares and realize the loss. That's my simplistic thinking. Guys, if you have any other opinions, please put it in the comments below. And now the question is that if they divest Grail, will they make a loss? What route will they take for divesting Grail? And as I mentioned, if they decided to issue Grail shares to existing shareholders, will the ratio of such issue, camouflage issues being losses being passed on to the shareholder? So those are the questions, and will that cause any requirement for some disclosures in SEC? So it's a very messy area in my opinion. Then looking at the cash balance, and if Carl Icahn were to succeed, then would the insurance companies pay for damages, or will there be a derivative action? We won't know until the suit is unsealed. All very interesting questions, and all pertinent to the valuation of Illumina shares, in my opinion. The most interesting prospect is that of seeing Illumina in a position where it is already divested of Grail and it resumes its core business and restores valuation. When will that happen? Maybe that could happen in the third quarter of 2024. As long as these uncertain circumstances continue, the share will be languishing. And once the suit is unsealed, we can see some information and decide if it is just detrimental to Illumina stock price or not. If it is not, then we'll get a little bit of a reprieve out there. And when I look at the deal and the sequence of events, I feel that Carl Icahn is justified in expressing wrath on behalf of the shareholders. Let us watch this suit, how it goes, and it will be an important learning lesson for us as retail shareholders on what happens with mergers and acquisitions gone wrong. Please let me know what you think in the comments. I always look forward to read your comments. It's always illuminative. Thanks and have a great day. Bye for now.